Hello, everyone. Welcome to Paving the Way Forward, the show where we break down the barriers to home ownership. Now, today is a very special show because it touches my heart sincerely. Today, we're zeroing in on one of the most powerful yet misunderstood tools available to our nation's heroes, and that is the VA loan. Yeah, so we want to spotlight the past to make it possible for home ownership today. Now, whether you're a veteran, or active duty service member, or someone who is looking to support those who have served, this episode is absolutely for you. It's the VA loan that is just a whole benefit in and of itself. It's a game changer, no down payment, no private mortgage insurance. Oh my gosh. And flexible credit requirements. And it's eligible for a lot of people who just aren't using it. How about that? So today we are asking the big question and clearing up a lot of myths, and we're diving deep into our expert panel to give you the facts, the strategies, and the success stories to show you just how far the VA loan can take you. So I'm pleased and honored to be your host today. I am Asia with Radio One Urban One, and joining us is Rulon Washington. He is the executive director of the Mortgage Sustainability and Business Execution for Wells Fargo. Hey, Rulon.
Hey, how's everybody doing?
Good. We also have Barry Coleman.
I'm good.
Vice President, Program Management Education for the National Foundation for Credit Counseling, NFCC. Hey, Barry.
Good morning. Hello, everyone.
Hi. And then we have Herman Palmer, the Senior Vice President of Outreach for Inclusion for the National Foundation of Credit Counseling. Hey, Herman.
Hey, Asia.
Hey. Y'all ready?
Absolutely.
So this is near and dear to me because my dad is a diehard Marine. So I've been a part of that whole military life for a very, very long time. So this touches me. I love the fact that we are sharing this information today. So we're going to just dive right in. Y'all ready? With
yes, indeedy.
Such powerful benefits.
Let's go.
And so many veterans, active duty, and of course, all of our people who have served this great country, we need to help them kind of take advantage of these VA loans. So let's just start with the beginning. Let's explain what a VA loan actually is. And we'll start with you, Herman.
VA loan essentially is a loan product that is tailored specifically to veterans, allowing them to purchase a loan, receiving extra consideration as a result of their service to this country. In many cases, they don't have to have a down payment. They get favorable interest rates, and it allows them to engage in home ownership affordably.
Absolutely. And so, and this is for active duty, veterans, or just anybody who served our service members, correct?
Correct. And had an honorable discharge or medical discharge.
Okay. Rulon, who is actually eligible for a VA loan? Like, do all banks and credit unions actually provide VA loans?
That's a great question. And that's one of the reasons why I love our platform, right? We can demystify a lot of the things that we hear out there. There's a perception that, banks create the eligibility for veterans to get VA loans, right? But essentially it's about your term of service, as Herman mentioned, right? You think about just three categories, right? Someone that is active military. If you're active military, really, you're eligible if you serve, at least 3 consecutive months during wartime, or if it's 6 months during peacetime. So essentially, if you're in active military for a year and you're actively engaged in the military, that's your full-time occupation, you're eligible for the benefits. Second category is someone who is retired, right? Honorably discharged, as you mentioned, Herman, as well, right? The third category is someone that may be in the reserves, right? So there's a misconception that if someone's serving time in the military under the reserve category, that they may not be eligible, but that is incorrect. I mean, I believe it's 5 to 6 years of service for anyone that's serving in the reserves. You're eligible for it as well, too. And so from a bank's perspective, these loans are amazing, right? Because they're guaranteed by the Department of Veteran Affairs, right? So a portion of it is guaranteed. So if, someone that's in that home, if they unfortunately default, right, there's some protections there. So that's why the terms are so favorable from the lender side, right? From the lender's perspective, let's just say Wells Fargo as an example, we provide that VA loan, but essentially it's a product for us, right? And so the goal is to try to make sure that folks that are out there that are interested in home ownership, that you take advantage of the product that's available. You shop around, you ask around, and you try to identify the best partnership with that financial institution. The majority of the banks do provide VA loans,
Right.
but I think the goal and the theme of what we're going to talk about today is just make sure you're doing your research, do your homework, so that way you can get the best outcome.
Okay. Okay, I love that. Barry, since we have you joining us today,
Yes.
tell us, like, if someone is watching right now, how does one start? How does one even start the process?
Sure. So, once someone determines that they're eligible for a VA loan, the important thing is to obtain that certificate of eligibility from the VA. Now, veterans can get this on their own directly from VA, but the lender can also obtain this on behalf of the veteran. And to obtain that certificate of eligibility, you have to have your service record. For those that have been discharged, that's the DD 214, which is the certificate of release or discharge from active duty. For National Guard members, there's a different form that they get if they have not served any federal active duty service. It's a NGB form 22 or 23. And that basically is what they would use to get that certificate of eligibility. But even as Roland mentioned, if you're currently serving, you're on active duty, you would not have that discharge information yet, but you can get a statement of service that's signed by your command or a personnel officer or what have you, and that would allow you to get that certificate of eligibility. And I will point out that va.gov site provides all of the details and the requirements on that. And then next, you'd want to connect with a VA-approved lender. As Roland mentioned, Wells Fargo is one of those lenders. There are many lenders that offer VA loans. And then you would go about getting pre-qualified to understand what your budget is, and then begin your home shopping to determine what type of home you can afford and the type of home that meets your lifestyle.
Okay. Now you
Can I plug something real quick? Asia,
sure,
I got to do this. I got to.
absolutely.
So, as you're going through all of this,
Okay.
if you are active military or if you're a veteran, if you're not sure about your financial situation, there's organizations like the National Foundation for Credit Counseling that can have that conversation with you to help you understand what options you have available, right?
Mhm.
Because there might be some misinformation out there, or someone may not be sure that they're eligible for the VA benefit. But if you're working with an organization like the National Foundation for Credit Counseling, they can provide you with some guidance and some insight. So that way you can have that conversation with a Wells Fargo or with another bank to really determine, how you get started. Really, it doesn't change. The starting point for
Okay.
home ownership doesn't change. It needs to
Right.
start with education.
Right.
Right? Education should be that foundation. You want to get it from a trusted source. Now, that education will allow that trusted resource to provide information for you. So that way you can have guidance on where to start, right? So Barry's a great example of someone that is a part of the National Foundation for Credit Counseling, but he has his military experience. So he's lived this and he's dealing with it every day. So it allows organizations like the National Foundation for Credit Counseling to be more of a resource for those getting started. So I wanted to plug that, right? Education first for anyone, whether you are active military, retired, civilian, education should be the foundation of everything.
Ooh,
Exactly.
can I pile on? Let me add this.
Go ahead.
So just listen to Barry talk about all the forms and things. That was like, wow, that's a lot.
I know all the acronyms. I'm like,
Oh my gosh, it's like a different language. So I'm like, that in and of itself can be intimidating. And if you're in the military, you're used to working as part of a team. You're used to getting plans. You're used to planning and developing strategies that lead you to success. The benefit to working with a HUD certified nonprofit counselor, they're your team. They can help you plot a successful strategy so that you don't have to be intimidated. You can go with all eyes open, with all information, and understand what your options are so that you can make the best choice to fit and meet your lifestyle requirements. Don't feel funny about asking for help. We all get it. So just move forward and do what's best for you.
There you go. And I actually was going to piggyback off of what Roland said and say that, Barry is not only with the NFCC, but himself has been in the military for quite some time and has gone through the process. So you have like a real expert on the panel today and could walk us through the whole process, frontwards and backwards, right, Barry?
Yeah, absolutely. I've done it several times. As a matter of fact, in the process of doing it again right now.
See,
Yeah.
and I love that. I love that. So as these questions come in, they're gonna be coming your way, okay, B? Rulon, like, how does a veteran or active duty service member choose a lender that's experienced in a VA home loan? So, do we look for certain things to find out if they are actually experienced in the VA home loan process? Talk to us.
Yeah, so that's a great question. So I would take a step back as far as the choice, right?
Okay.
Really, the VA loan product is pretty standardized from bank to bank to bank. What you want to look for as a consumer are different advantages and programs that that lender might be providing if you are having military service, right? So, for example, there might be a closing cost credit. There might be an interest rate reduction, right? So there might be specials during Memorial Day weekend, right? There's you would be surprised how much promotional opportunities there are out there when you're doing your research. As I mentioned earlier in the show when we first started our conversation, the banks, the lenders, they're not controlling the structure of a VA loan, but what they can do is they can put other things that are more enticing on the front end. So the goal is to identify where you have more opportunities, right? The second part to that is loan officers that are working for a lot of these financial institutions, they are certified in focusing on how VA loans are going to be underwritten, the documents they need. So there's familiarity there. So I'll give you an example here at Wells Fargo. We actually have annual training around VA loans, right? So our loan officers, they take that training, which usually takes a day or so for them to go through the full training. And now they have a deeper scope of how to work with that customer that might be a veteran or active military and they want a VA loan. So usually what you see is when you're engaging with the loan officer, you might see on their business card or something promotional that they are certified in VA lending, right? That's a good sign that they know exactly the scenario that they can help you with and that there's no ambiguity in the process. They've worked with consumers before that are veterans and they're familiar with the VA product. So look for those two things. Look for promotional opportunities and also look for that signal that that loan officer that you're working with is familiar with the VA product.
Give us an example of a promotional, like what would a promo be?
So a good example is this. So when you think about, there's a thing called the Community Reinvestment Act, right? So lenders create promotional products depending on where you live or where you're going to move. So for example, if there's a certain neighborhood or census tract in the majority city in a larger metropolitan area, that lender might have a special, quote unquote, right? Where it's half of a point off of the interest rate if you're moving in this eligible neighborhood, right? Or it's will cover your closing costs if you live in a specific MSA. Banks are known to do that to make their product more attractive. As I mentioned, the VA loan is so standardized, right? That it doesn't differentiate from bank to bank to bank. It's really on the consumer's eligibility. But the attractive part comes when you can layer this thing with other programs. So for example, there might be a city that has a down payment assistance program, right? That VA loan, right? You can supplement some of that down payment assistance. And even though a down payment isn't required, a down payment can eat away at the principal amount that you're going to be borrowing, right? So it puts you in a situation where you can still take advantage of local programs and municipal programs, but that lender might have special programs depending on where you're going to move or what city that you're living in. So always be on the lookout for any type of activities or promotions around programs and products.
Okay.
I can give an example of that right now. The lender, I won't mention who they are that I'm working with right now, actually offered an incentive 17,500 towards closing costs. So that's something that I took advantage of. And so yeah, you can compare, loan offers from multiple lenders, and that way that will help you decide, what lender maybe has the best promotion to meet your own individual needs.
Strong J, yes. Oh, strong J.
Strong J.
Look at Barry, 17. Listen, that's some nice help right there, Barry.
Definitely.
You got a room for me? You got it.
Right?
You're always welcome,
Palmer Suite. I want the Palmer Suite. Westward facing.
Well, Rulon, you raised a good point about the down payment. Barry, are down payments always needed?
No down payment is required for VA loans in most areas of the country if the veteran has full entitlement. Now, the veteran can choose to make a down payment to reduce their monthly payment, or to reduce the VA funding fee, which is a fee that's charged for VA loans, and depending on the down payment, that fee could be reduced. Also, a down payment might be required if the loan amount exceeds local loan limits, which the local loan limits in most areas in the country is 800 and 6,500. It's higher in some high cost areas. So and to give you an example, so if the loan amount exceeds the loan limit, the veteran may need to put down 25% of whatever the difference is. So let's say the loan limit was 805,500, but the home is 900,000. The
Okay.
veteran would need to put down 25% of the difference. The difference in this case being about 93,500. They'd have to put 23,375. But if the loan is within the loan limits, there's no down payment requirement, I think is the key point there.
Okay. All right. Look at Herman's face.
So, yeah, because I'm like, well, I got to make sure the person that I'm working with knows everything, because I want to take full advantage of all these wonderful benefits. Don't shortchange me. Don't cheat me. Shoot.
Absolutely.
Yeah. I will say this.
Go ahead.
I will say this. If I can make a comment, Barry's point around the down payment, in general, that doesn't mean that you still don't need to save and plan and prepare. The benefit of a VA
Absolutely.
loan is the down payment isn't a requirement,
Right.
but as we've talked about before, once you get into the house, things happen, right? So the
Right.
preparation is still required, right? So now you still continue to save and you still manage your budget. Thankfully, that VA loan allows you to not put down a large lump sum, but you
Right.
still should be saving and still preparing for that home ownership journey, right? Because you never know when there's going to be these situations that are out of your control that require some solutions, right? And that may be
Mhm.
monetary solutions. So you think about, the
Absolutely.
cost of repairing something at home, and so there's always this thought process, and I've heard this in the industry, and this is one of the myths that's out there, that there's some industry pundits that frown upon VA loans because they feel like the consumer doesn't have to bring anything to the table.
Right.
Well,
Yeah.
that isn't particularly true. The VA, it's a benefit, right? And that service that was
Mhm.
provided for our country allows
Mhm.
person access to that benefit. But as that consumer,
Absolutely.
they still should be saving and preparing, right? Skin in the game is the service,
Right.
right? The
Yes.
availability of the loan product gives them the benefit. But my point being is continue to budget, save, and prepare and plan, knowing that you didn't have to spend a lump sum of money on your down payment to get a VA loan.
Yes.
And
Yep.
Love
if
it.
I could, one thing I would
Yes.
say is, just because you don't have to submit or provide a down payment does not mean you should not save down payment money and then put it in your
That's right.
emergency fund,
Right.
Yeah.
because you do not want to have your home ownership journey be derailed because life happens or shock comes, a financial shock. Your
Right.
transmission goes, all of a sudden you don't have the money for that, or the water
Right.
heater goes. So you want to have a nice emergency fund. So it should be even easier for you as a vet participating in this program, taking advantage of these benefits, so you could have real peace of mind going into a home, knowing that what could have been your down payment is stashed away as an emergency fund.
Right.
Yeah,
And
that's a good point. Because a lot of the veterans, Barry, as you may know, right? You once you retire, you're getting your military retirement, you're getting your VA disability if you have the option to get disability. You
mhm.
might have a second job, but you might not. But really, some of that
Yeah.
income is fixed,
Right.
right?
Yes.
So as you're in your home ownership journey, when things change around you as far as the economy, things get a bit more expensive, that budgeting and everything comes into play, because being on a fixed income can make things a bit tight, right? So we're just thinking about the
Absolutely.
demographic. If we're just thinking about veterans, it's always that thought process of saving and being financially responsible if you're on a fixed income as well
Yep.
Right.
too.
And I
Right.
have another plug for down payment. Down payment is equity. That's equity that you've already gained in that home. So, you know, although you don't have to, there are advantages to putting money down.
Okay. I
Yep.
love that.
Mhm.
Herman, so Rulon kind of touched on this a little bit, but with the lenders, when you're actually helping these people kind of get themselves together for the home buying process, um, what type of questions should they ask to determine like who's best? Like what would be the best lender? And do all banks actually take VA loans?
Yes, to answer your question, I do think all banks take VA loans, and Rulon can answer that better than me. But the questions, this is my wheelhouse because I'm one who likes to negotiate, and I want to make sure I'm being connected to somebody who knows what that they're doing.
Right.
And that wasn't a blank. Here we go. So we got one question would be, how many VA home loans have you closed in the past 12 months? And that helps you to gauge the lender's actual experience with the program.
Right.
Number two, do your loan officers and underwriters receive special training in VA home loans? Again, you want to make sure, not just broadly, you want to know specifically, do they know how to handle VA loans? Another one, what is your typical closing timeline for a VA purchase loan? You want the lender who closes efficiently, especially if you are in a competitive market. Here you go. What are your interest rates and APRs for VA loans today? You want to be able to compare rates across lenders. Small differences can add up to major dollars long term. Do you offer discounts or special terms specifically for veterans? I've served my country. I put my life on the line. You know, if this is a program that's going to benefit me, I want to take advantage. Some lenders may waive or reduce certain fees for veterans or have veteran-friendly policies.
Right.
I got plenty. I got a couple more. I get excited with this.
Okay.
How easy is your process for obtaining the certificate of eligibility? That's a big deal for veterans. I mean, that you don't have that, you don't move forward.
Right.
What systems or portals do you have for tracking my loan progress and communicating with me?
Right.
You know, this is the biggest purchase of your life. And you want to know, you know, you got people at the house. Did they call? Did they call them? Did they call? As opposed to you bothering that loan officer, just give me a portal that I can track and see for myself.
Okay.
How, this is cool. How do you help me convince sellers or their agents that VA finance offers are as strong as any other? That's what Rulon alluded to in the beginning. And what happens if the appraisal comes in low? How will you assist me? So you want to ask these questions because you're building your team, and this is your team that's going to help you win. So don't be afraid. You know, some people are like, oh, I don't want to make them feel bad. Oh, make them feel bad. This is your questions are the opportunity for them to show up and show out. Like, oh no, I got this. Come on, give me some more. That's the kind of person you want to work with.
Right. I got you. And so Rulon, he said for me to ask you this question. Do all banks and credit unions provide VA loans?
Well, so as I mentioned, the VA product is very attractive for lenders because there's a guarantee from the Department of Veteran Affairs. And guarantee means essentially that if there was a scenario where the loan defaulted, that lender is in more control to manage the risk, right? So there's that level of comfort there, which offers the favorable terms on the front end. So not every single bank is going to have a VA product. The majority of banks do have that product. Your large white label organizations like your Wells Fargo's and your others, they're going to have those products and programs, right? The smaller credit unions also do a very, very good job of having those VA products, and they might actually have more favorable terms because they're more localized or more regionally focused, right? So do your research. Find 3 to 4 lenders, work with the National Foundation for Credit Counseling because they have a leg up on helping you identify lenders that provide that VA product. All of the questions that Herman asked are great questions, right? Because you want to do all of your information seeking up front. You know, just because you see that a bank has a VA product doesn't mean that product is going to fit your scenario if there's another lender that has something that's more favorable, like an interest rate reduction or another product or program. So just keep that in mind. Shop around, do your research, and get information from a trusted resource.
And ask questions.
Yes. And speaking
That's
of
right.
questions, since we have Barry, our expert, on the panel today, what questions would you advise your clients to ask?
Yeah, absolutely. I think Herman touched on some of those. Ask them about their experience in providing VA loans. Ask them what are the details involved in their process for VA loans. And certainly, you want to know what it's going to cost you as a veteran with a VA loan if you were to receive a mortgage through their particular company. So I think those are things that are important to ask. And to Roland's point, many lenders provide VA loans. I think there are probably some that do a better job at VA loans than others. So understanding what their experience is like. You can even, do some research on your own as far as looking for reviews and that type of thing with the lenders for veterans that have used particular banks to fund their VA home loan purchases.
Okay. I love that. I love that. Listen, if you are just joining us, welcome to another episode of Paving the Way Forward, presented by Wells Fargo and the NFCC, the National Foundation for Credit Counseling. I'm your host, Asia, with Radio 1, Urban 1, and we would love for you to join in the conversation. Please list your questions below. We would love you to ask anything, and we want you to continue to tune in, and we want you to watch this message right now.
How much do you really need for a down payment? While 20% is often recommended, many home buyers secure loans with far less. Some programs allow as little as 3% down, depending on your financial situation. The key is understanding what's right for you. Want to explore your options? Visit wellsfargo.com/mortgage education for trusted guidance on down payments, loan types, and budgeting for homeownership. Because the right knowledge leads to smarter decisions. This message is a collaboration between Wells Fargo and the National Foundation for Credit Counseling.
Terms apply.
Great job. To learn more about the home buying process, again, we want you to visit wellsfargo.com/mortgage education for a better life beyond debt. Visit nfcc.org. So we're going to get back into the questions. You guys ready? All right. We have a question coming in. Do you help with closing costs, negotiation, or seller concessions specific to VA loans? And I'll let anyone jump in to answer that question.
Good question.
So that might be a question for.
Well, I can jump in first.
There you go.
Go ahead, Herman. Go ahead.
Well, I was going to say that sounds like the kind of question to a lender or somebody who's going to be financing the loan. So I was going to say, Roland, that's your wheelhouse.
Wow. Right. So when you think about concessions, right? So that is really a conversation that the buyer and the seller engage in. So when you just think about the roles of the home buying process, your realtor is helping, both the seller and the buyer identify who they're going to sell to or what home they're going to look to purchase, right? So they each have a role. Right. The lender is providing the financing because, 99% of the time, it's really hard to have $500,000 in your back pocket just to buy a house. Right. So the financing comes into play when the lender is able to secure a loan, go through your underwriting, see everything that you can afford, and then create a scenario where you don't have to pay a lump sum. Right. You'll repay that. Now, what happens is if you identify a property and that seller, right, may have some repairs that they need to get done on the home. Like Herman mentioned, if the appraisal comes back lower, or if you have someone that's doing an inspection on the home and there's something that kind of strikes a little chord there, those scenarios create a scenario where the buyer and the seller may need to have a conversation around the transaction. And sometimes, in essence, if the seller is also doing a simultaneous closing because they're buying another home, they may be open to covering the closing costs for the buyer, right? Because they're getting excess of value from the sale of their home, right? So let's just say they only owe half of what the home is worth, right?
Right.
That amount that they get in equity, sometimes they're generous enough. Not all sellers do this, but some will cover your closing costs or have other additional concessions. So it's a situation where everyone has a role, but really the lender's space is to make sure that they're financing. But that conversation between the seller and the buyer should be deep enough for them to really negotiate the terms of the mortgage, because whatever the final number is, that's what you're going to finance with your bank.
Oh, wow. Okay.
If I can jump in, a lot of times if you have a seller who's buying
Yes.
and has the wherewithal to have two houses,
Okay.
it is much more appealing to them to not make as much on the sale of their house versus having to carry two mortgages at the same time.
That's right.
So you want to understand the situation of the seller. So communication, whether it's, you know, seller and buyer or through realtors that they're working with, you want to understand as much as you can.
That's right.
Absolutely.
And I'd also add, you know, this is the type of thing too that a buyer's agent can help, you know, the buyer with. They can help with those negotiations to sort of be, you know, your advocate, to help, you know, and ask for certain concessions and then negotiate that on your behalf. So this home purchase that I'm going through right now is the very first time that I used a buyer's agent, and I'm happy that I did because this person did a great job for me and was able to help negotiate some of those terms for me. So,
Okay. Someone dropped a question. They want to know, what is a buyer's agent, Barry?
yeah, yeah. So a buyer's agent is an agent that the buyer hires to help them with their home purchase process, and in
So
most
not a
cases.
realtor.
No, well, yes, it's the realtor that works for you as the buyer, the person that's buying the home. Because if you think about it, when you are purchasing a home, the seller is looking out for their best interest. So you need
Right.
someone to look out for your interest. So hiring a realtor, your buyer's agent, that's the person that can help you with those negotiations.
Okay, and they're the same person.
They're the same person, yes. Yeah.
Again, you're building your team. You want to win.
Yeah.
You
Right.
want to win. So build your team.
That's right.
I love that. Okay. So find a good agent.
Right.
Good advice. Okay, Barry, with the VA loan, do you pay PMI, private mortgage insurance? And what types of fees are associated with VA loans? Can any of those fees be waived since you bought so many of these VA homes? Talk to us.
Yeah, those are great questions. So, um, PMI, private mortgage insurance, is not required with the VA loan. That's one of the main advantages, I believe, to buying a VA home.
Okay.
If you purchase a conventional loan and you put down less than a certain amount, or you purchase an FHA, a home using a FHA loan, then you're going to pay private mortgage insurance, which is a percentage of the purchase price. When you
Mm,
purchase a VA home, there is no private mortgage insurance. So that's a key advantage. Um, However, there is a VA funding fee, which is a one-time VA fee that helps to pay for the VA home loan program. Now,
okay.
that fee will be different based on, you know, whether or not you're putting money down,
Okay.
and it'll also be different if this is your first VA loan versus a subsequent VA loan. Now, that VA funding fee can be waived for veterans that have service-connected disabilities or surviving spouses of those service members that passed away due to a service-connected situation. And so, and then, you know, other than that, standard fees that are involved in purchasing a home apply, you know, appraisal, you know, title fees, lender fees, all those things that are included in closing costs. But again, the big advantage to a VA loan is that there is no private mortgage insurance that's required.
Absolutely. I see you shaking your head, Rulon. You're like, yes.
Yeah, it's listen. Just any loan any loan transaction, you're gonna have fees associated with the mortgage transaction, right? So sometimes when you have these really unique programs, right, whether it's a VA loan or whether it's like state assistance for home ownership or like a local city down payment assistance program, the assumption is, all right, as long as I don't have to pay that, I don't have to pay this. And then when you
Right.
get to the closing table, right, you see this bill for $6,000 or $5,000, and you're like, well, what is this, right? So
Right.
everything's spelled out for you, right? There's an application fee, there's the cost
Yep.
of the appraisal, right? So there are things that are just standardized that you have to anticipate whenever you're getting into any mortgage transaction, right? And that's when we were talking about a bit earlier about a seller being gracious enough to cover the closing costs, right? Those closing costs are different from the down payment. So VA loan doesn't require a down payment, but that fee that Barry mentioned and also the closing costs, those are the closing costs are standard with any mortgage transaction, right? So just keep that in mind as you're budgeting and as you're planning. All right, the VA loan still has the same features as any other loan creation because those closing costs are just how the loan is constructed, processed, underwritten, and dispersed to the
Okay.
homeowner.
Okay. And Herman, are there limits on how many VA loans someone can have in their lifetime?
I have good news for you.
Okay.
There are no limits, none, on how many times a veteran or eligible service member can actually use the VA home loan benefits to purchase the home. Here's the requirement.
Okay.
As their primary residence.
Okay.
You can reuse your VA home loan benefit as many times as you like throughout your life, provided you meet the eligible and requirements.
Okay.
It's hard in the brain sometimes. Now, here's the thing. Just because you're able to use the benefit repeatedly, there are still a few key factors that come into play that determine how easily you can use it again.
Okay.
Entitlement. And for those that don't know, VA entitlement refers to the amount of money the VA guarantees on a veteran's home loan. This guarantee is what helps lenders offer favorable terms, such as no down payment and competitive interest rates, is what I talked about before.
Right.
Your remaining entitlement affects how much you can borrow without requiring down payment. For example, if you've already used a portion of your entitlement and you've kept the home, you may have less available for your next home purchase.
Okay.
That's important. There's the occupancy requirement, where VA loans are for a borrower's primary residence, where you buy. You are not going to be Oprah Winfrey saying, you get a home and you get a home. You're not doing that. It's got to be your primary residence.
Right.
You got eligible property and lender qualification requirements. You still have to meet the credit, the income, the debt to income and property standards that the VA and your lender require. And lastly, you can have, as Barry indicated, you can have multiple VA loans simultaneously. It is possible to have more than one VA loan at a time under certain conditions, such as when a service member relocates and there's sufficient entitlement remaining.
Yes, I love that. Great answer. Great answer. Drop those questions below, comments below. Again, you are chiming in to Paving the Way Forward, presented by Wells Fargo and the NFCC, the National Foundation for Credit Counseling. Again, drop those questions. We'd love to have them. And please watch this message.
Thinking about buying a home? Start with a solid financial foundation. Credit counseling can help you understand your credit, create a plan to manage debt, and prepare for the mortgage process with more confidence. Through the National Foundation for Credit Counseling, certified counselors are here to support your goals, not sell you anything. A better understanding of your credit can make homeownership more possible and more sustainable. Knowledge is power. Guidance is peace of mind. Start with the National Foundation for Credit Counseling.
That brother was smooth.
He's smooth. He's smooth with it.
It's so expressive. Oh my.
He was talking to you.
He believes in what he's saying.
Oh my goodness. So we have some questions that did come in. I'm going to give them both to Rulon and Barry. It's a great question. Can surviving spouses use the VA home loan benefit, and what is the eligibility criteria? Either one of you.
Yeah, okay. I'll start. So yeah, absolutely. So if the veteran dies in service from a service-connected disability, their surviving spouses can use their the veteran's VA home loan benefit.
Okay.
Also, if the spouse hasn't remarried or they remarried after a certain age, then they can use it as well.
Okay.
So yeah, absolutely. And you know, there are certain service requirements, and I think Rulon mentioned that earlier, the wartime requirement, the peacetime requirement. But the good news is that surviving spouses for those military members that paid the ultimate sacrifice can use that Veterans VA home loan benefit to purchase a home.
Rulon?
Yeah, and I would rely on trusted resources, right? The VA does a great job
Yeah.
of providing information around whether it's GI Bill information, VA loan product information, disability information, healthcare. The VA is an amazing resource, right? Have that conversation if you are a surviving spouse
Yeah.
around your eligibility. The lender on the lender side, right? We're not controlling the eligibility.
Right.
Essentially, for us, we're providing the product. The certificate of eligibility will help us determine how we lend, but the resource situation is vital, right? Making sure you have all of the resources that are available to you. I guarantee you, we have some of our lovely audience members that were unaware that if they are a surviving spouse, that they're eligible for this benefit, right? So this is really good information. Just understand that when it comes down to these programs and the eligibility, the lenders really don't have a ton of control over who's deemed eligible or ineligible. What we're
Okay.
doing is we're providing the liquidity, right? And as long as you're able to meet the eligibility for what the program requires, from lender to lender, from bank to bank, they will be able to provide the mortgage to you. But essentially, there is upfront eligibility that needs to be done, as Barry mentioned.
Yeah.
Okay.
And I'll piggyback on what Ruan said about the VA resources. They have an excellent website that is easy to navigate and to find information that you need. And they will answer all of those questions that veterans might have. And guess what? If you
What?
call them, they actually pick up the phone.
Oh,
So
wow.
you can really talk to someone. And they are
That means
still.
something now.
Yeah, absolutely. It really does in today's society. And even during the government shutdown, they are working. They're still on the job.
Yes.
Yep.
I would tell you, there's nothing aggravates me more than getting an AI receptionist or going to a third world country. I'm like, I want to ask somebody something right now. It irks my spirit. So that means something, okay?
Yes, ma'am.
So listen, the question came in that's actually a really good question. It's something that I want to know as a former military dependent. They want to know, are the benefits transferred to children? Or I think that's a very good question. Can children use a VA loan? And if so, how does that work?
Yeah, that is a good question. As far as VA home loans, no, that cannot be transferred to
Okay.
children. I know there are some VA benefits like the education benefits under certain education programs that can,
Right.
but not the VA home loan benefit. But again,
Oh,
surviving spouses would be eligible.
not surviving
No,
children.
Yeah.
unfortunately not. Yeah,
Unfortunately, no. But
yeah.
what's interesting is that there are some credit unions out there.
Mm,
I'll you can identify a few on, you can Google some, right?
Okay.
That will allow you as a military dependent
Okay.
to take advantage of specific programs. They may not be a VA loan product,
yeah,
but there might be particular promotional programs if you are a dependent and you are a member of this bank, where they can provide you closing costs or maybe $10,000 to $15,000 in down payment assistance. So there might be benefits
yeah.
available out there. You just got to do your research. But to Barry's point, it isn't exactly a VA loan, but you might have some promotional opportunities or products and programs that are specific to dependents of the military. You got to
Good
shop
to know.
around though. Do a little bit of research, or
All right.
go to the National Foundation for Credit Counseling. That's where I would go.
Let me tell you something. You don't need a commercial in life. All you need is Rulon. And he is so NFCC. I love that. I love that. He's like, go to NFCC.
He's a great partner. Wells Fargo is a great partner.
Absolutely.
Absolutely, absolutely. And he's telling the truth because
Thank
you
you, thank you,
provide
thank you.
so many amazing resources and you give so much information. You people always wait till the last minute to give us these questions. I don't know why. We tell them weeks in advance. They wait till 1:59 to ask 10 questions, but they actually get a lot of great information from these. So we all thank you for all that you have done, all that you continue to do, because these conversations need to be had. So thank you for opening our eyes. Some of these conversations we have, I'm like today's years old when I find out information. So it's great to have you all here on this platform. So again, we thank you. I have a question for everyone that came in. Are VA loans assumable? Does anybody know?
So let's see. Anyone can assume a VA-backed loan, including non-veterans,
Oh,
provided they meet specific credit worthiness and financial criteria that's set by the lender and the VA.
okay.
Like, for example, veterans and service members, if they're a qualified veteran, they can assume another veteran's VA loan, potentially substitute their entitlement for the other, which will restore the full eligibility of the first, the seller.
Got you.
Non-veterans, let's see, civilians can also assume a VA loan if they meet the lender's credit and income requirements, but this comes with risks to the veteran because their entitlement is now compromised because it's still tied up in that property.
Oh,
Now,
wow. Okay.
so
All right.
that's a big consideration.
So
I didn't know that. Wow.
Yep.
yeah, that's what I'm saying. I didn't know that either. So you don't lose the VA because don't you have to be the primary resident? So you don't. It's
So
you can assume that.
Let's see, the civilian can still buy it, but let's see, you got loss of VA entitlement. If a non-veteran assumes the loan without a substitution of entitlement, the original borrower's VA eligibility remains tied up until the loan is paid off.
Oh, wow.
Yeah, whatever portion was attributed to that home that's being assumed. That's correct.
Okay, so that
wow.
okay, now that leads me to another question. I'm just taking this person's question and going off. So that means like if you have the 800,000, is that the total amount that you could borrow, and 200,000 is in one home, they could still borrow up to 600,000 for a primary residence, but the other 200 is okay.
Yep,
okay,
that's
so
correct.
you don't lose it in this
Now,
entire.
unless they get a release of they can get a release of liability obtained from the lender. So like even
what
after
lender would do that?
Hmm?
When they have guaranteed, what lender would do that when you have guaranteed?
Because they're good people now. They're nice.
There you go. There you go.
They want the
There you go.
transaction. Come on. There's equity built up.
Listen,
Come on,
hey,
stop it. Be nice.
well, I'll say this
What?
to pig Herman. Listen, from a bank's perspective, as long as that person's paying that mortgage, right? That mortgage is getting paid, right? That is where the mortgage servicer makes their money. So we talked about this a few times on earlier shows, right? There's two roles in the mortgage transaction. There's the mortgage originator, right? And then there's the mortgage servicer. The mortgage originator is the person that you're working with to get the mortgage started. You go through the process of talking with them, you have a loan officer, and then once that loan is originated, it may not be in that lender's servicing portfolio. It may go somewhere else.
Okay.
That servicing responsibility is a 30-year partnership between that financial institution and that homeowner.
Right.
Now, to Herman's point, right, there might be interest in releasing in a scenario with the VA assumption, knowing that the person that's currently living in the home and residing in there is paying that mortgage every month, month over month on time. Because that is where the servicer makes their money, is through managing the payments for those 30 years, right? So there is an advantage of having someone in that home for another 30 years.
Yep.
Oh, wow. Okay. I'm just saying, if I can get my money guaranteed, I'm
So-
gonna go with the guarantee.
Well, let me ask you. So the way to think about this from a financial institution standpoint,
Yeah.
there's two ways to make money: on the transaction and on the maintenance, the servicing over the
Right.
loan. The transaction happens, it's
That's
over.
correct.
Boom. And then
Yeah.
the servicing, that's a guaranteed revenue stream over whatever the length or the term of the mortgage is. And there's something to be said to having that consistent revenue stream because people are less likely to put their home, their primary residence. That's why so many things say your primary residence, because you're not going to mess up on home.
Right.
Right.
That's how they make their money.
Yeah. Because we all need a place to live.
Yeah.
Completely correct.
And if you marry, your spouse will be
correct.
like,
That's
I
correct.
mess up the house.
Right.
The house get messed up, you get messed up.
Right.
Mhm.
So we gotta
Yeah.
backpedal just a little bit because someone asked what is a loan assumption. So maybe we need to explain what that is to some of our listeners today. Brulan, would you like to explain what a loan assumption is?
Yeah, assuming the loan, and sometimes a loan assumption is based upon a life event, right? Where, in general terms, if it's not the VA topic that we're talking about, an assumption could be a borrower who passes away and their spouse is the non-borrowing spouse. So they're not on the mortgage, but they're living in the home, right?
Mm-hmm.
They may want to assume that mortgage and put that mortgage in their name. We saw that a lot during the housing crisis when you had
Hmm.
a borrower who may have passed away or went through a divorce, and then the surviving spouse or the divorced spouse was living in the home, and now they want to maintain those mortgage payments, right? So the mortgage company is essentially going to look at this new borrower's financial situation. So they're basically going to re-review them for a mortgage,
Mm-hmm.
right? And once they see that they can qualify with the existing terms of the mortgage, right, they're able to assume that mortgage and maintain those payments from that point going forward, right?
Right.
So an assumption is just a transfer, essentially,
Right.
right? But there is, to Herman's point, there are certain criteria that that new borrower needs to meet in order to be able to assume the mortgage. And sometimes there's also a fee associated with assuming the mortgage as well too. So it's not a clean transaction where it's like, hey, show me your bank statements and now you're on the mortgage. It's we need to look at your credit report. We need to see what your financial situation is, and there might be a
Yeah.
fee associated with assuming the mortgage.
Right.
In the
Right.
VA situation, it's a little different, right? Barry, you probably can talk a bit more around how that works in the VA space because that assumption may not be based on a life event. It just may be a transition, right? From a
Yep.
veteran maybe wanting to move or right. Is there a different scenario with VA?
Um, it's essentially the same. The buyer would take over the existing loan, based on the interest rate of that loan and whatever the balance is for that particular mortgage. And to your point, there would be a fee to assume that loan, but it's very similar to that of a standard loan that's being assumed. The only difference, as Herman alluded to earlier, is that depending on whether it's a veteran or a non-veteran,
Right.
determines whether or not that portion of the eligibility that's tied up in that home continues to be tied up, or if that is released, and then the original borrower gets that portion of the eligibility back if it's another veteran.
Yeah. Yeah. I mean, ideally, you would think that that's a great situation, especially like if there's a great deal of equity in the home and they got a good
Yeah.
interest rate. If they got like 3% and you're locked in, you assume
Yep.
that loan. That's amazing. But if they got like that predatory lending spike at 12%,
Yeah.
nobody wants that.
Yep. No.
I will say this. Sometimes the assumption process can take a
Yeah.
long time,
Oh wow.
right?
Mm.
Now, there might be a scenario where if someone's looking to move into a home, a traditional transaction might be faster
Mm.
and less
Right.
strenuous
Mm.
than assuming the mortgage that is highly scrutinized because you're taking an existing mortgage with terms and you're looking to fit a person, a square peg
Mm.
into a round hole, right?
Oh
You're
wow.
trying to find a way to make them fit.
Right.
That might take a little bit longer than a traditional transaction. So that is something that consumers need to think about is weighing their options. Should I assume this maybe because the interest rate is a little bit lower than the current rate that I have now,
Mhm.
but is it going to take me 90 days to get into that home, right?
Right.
Versus a traditional transaction that time might be cut in half. So understanding your options, having conversations, one more plug for the NFCC, right?
Mhm.
Having that conversation with a trusted resource is important.
Yep.
I love that. Now, are there state and local housing programs that work with veterans or offer like additional assistance? Rulon, I see you nodding.
Yes, 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 and yes, right? There's tons of programs. So there's programs on the front end,
Uh-huh.
right? Front end meaning to help you get in, and then there's programs on the back end, which is essentially to help you if you do get into a scenario where you're defaulting on your mortgage, if your mortgage gets behind. The good part about the front end programs is they're upfront, right? And you see them and you can prepare for them, add them on to your scenario. Barry's a great example of what he just mentioned earlier about the assistance
Yep.
that he's getting for his home transaction, right? So you have state, maybe local municipal programs, or the lender might have down payment assistance programs, right? So you can apply those to a loan. But once you're in the home, right? And now it's that 30-year time frame of when you're a homeowner, the
Mhm.
mortgage company that's sending you your statements each month, they're not looking at your scenario as, hey, you have a VA loan, so you can't get assistance. Usually assistance comes externally, outside of the mortgage company. So, for example, if you're in duress or if you're in an area where it might have impacted by a disaster, for example, and there's state relief or city relief that helps you provide money towards your mortgage payment or helps you
Right.
with delinquency, those programs can be applied to your mortgage, whether you have a VA loan or a traditional conventional mortgage, right?
Right.
On the servicing side, the VA terminology is sort of a moot point, right? Because we want to help out the homeowners that need assistance. So the state programs don't have a provision in there saying, we're going to help everybody except VA, or this is only for VA loans. At that point, it's just, does the homeowner need assistance? Yes or no? If they do, here's the assistance. So on the servicing side, when we're helping people stay in homes, there's a lot more generosity around how the programs can be applied.
Okay. Okay. Herman, your thoughts?
Oh no, I what he said. He said it well.
I think the important thing there is that the individual should do their research. Again, they can use the NFCC to help them to possibly identify local programs to determine if there are any that work with veterans and what level of assistance might be available. I would also put a plug in for state housing agencies. Many of them have
Yep.
different programs like down payment assistance and that type of thing. And there's one in every state. So if the potential homeowner goes to their state housing agency, that would be a great place to start to find information.
Ditto.
Great point. Great point, Mary. Great point.
Well said, Herman. Well said.
Thank you. Thank you.
And as always, time always flies when I'm with you guys. It's like, oh my goodness. Just like that, we've been talking for an entire hour, y'all. That is a whole wrap of this episode of Paving the Way Forward. We really do hope that today's Q&A gave you some clarity, gave you the confidence you need when using your VA home loan benefit. And just remember, if you served, you earned it. So don't leave this powerful tool on the table. And we want to definitely thank everyone who has served, everyone who has just helped with our freedom in this country. We want to thank you so much, my father included, a proud Marine. I know, Barry, you served. Which branch were you in, Barry?
Air Force.
Okay.
Yeah.
All right. And I know, Rulon, you're a military brat like me.
I am Navy brat. Good old
Okay.
Navy brat.
Herman, did you serve or were you in the military family?
I have not had the honor of serving the country in that way, but I have plenty of uncles who have.
You know what I mean? So we all know what that's like. And so we appreciate you for all that you have done and continue to do. Herman, how can someone reach you? Because these questions are continuing to come in. I got like 10. I don't know why they wait so long.
You can hit me up. Go to nfcc.org. You can get to us that way.
There you go. Rulon, same question.
Yeah, so I have to plug again, nfcc.org. Great resource, amazing resource to get general information just around homeownership, credit counseling, budgeting. But if you want information around homeownership, visit wellsfargo.com/mortgage education. We created a website that is very easy on the eyes, and we're expanding it as we continue to move forward in 2026. So please visit, look around, explore, and get some more resources.
And Barry, same question.
Yeah, absolutely. NFCC.org is a great place to go. And I'll put a plug in for the Wells Fargo site as well. A lot of great information there for home ownership.
Absolutely. There you go. And to learn more about the home buying process, please visit wellsfargo.com/mortgage education. And for a better life beyond debt, visit nfcc.org. Now, I've been so pleased and honored to be your host. I'm Asia with Urban One Radio One. You can follow me at Always Ask Asia on Facebook, Instagram, Twitter, and TikTok. We thank you guys so much for joining us. Until next time, keep moving forward. To learn more again about the home buying process, as well as various grants and low down payment options available that can help your dream become a reality, please visit wellsfargo.com/mortgage education. And again, nfcc.org. And before we go, we leave you with this.
Buying a home is a major milestone, but it starts long before the search begins. Understanding your credit, managing your debt, and setting a realistic budget are key parts of the journey. That's where credit counseling comes in. Through the National Foundation for Credit Counseling, certified nonprofit counselors provide personalized support to help you take control of your finances, and prepare for responsible home ownership. There's no pressure, no hidden costs, just trusted guidance. You'll learn how lenders view your credit, what you can afford, and how to improve your financial profile so when you're ready to buy, you're truly ready. Before you find the right home, find the right path. Start with the National Foundation for Credit Counseling.